A massive silver price alert is unfolding. And if you own gold or silver, this is something you need to see immediately. Francis Hunt has just revealed a development so extreme that most investors are completely unprepared for what comes next. According to Hunt, the gold to silver ratio is on the verge of collapsing into single digits, a move that would fundamentally alter the entire precious metals landscape. And when that happens, silver will not stop at $300 or even $500. In Hunt's words, silver is headed for 4 digits. In old money terms, that means $500, $1,000, possibly $2,000 per ounce. But the most disturbing part of his warning isn't the price target, it's the reason behind it. Roughly 60 to 70% of the world's silver supply is produced as a byproduct of mining other metals. At the same time, emerging solid-state battery technology alone could consume 100% of current annual silver production, leaving nothing for solar panels, nothing for electronics, and nothing for private investors. The supply crisis has already begun, and most people holding silver have absolutely no idea what is approaching. This is boring currency where uncomfortable financial truths are discussed openly long before Wall Street admits them. Before going any further, there is an important message for those who have spent decades working, saving, and building their wealth. If you are over 50 and serious about protecting what you've earned, this channel exists for you. The financial storms ahead will not wait, and preparation matters. Becoming part of this community means staying informed before decisions are forced upon you. Now, what Francis Hunt has revealed about silver is not speculation or hype. It is a convergence of technical breakdowns, historical precedent, and a structural supply failure that is already in motion. Hunt begins with the gold to silver ratio, one of the most important and misunderstood indicators in the metals market. This ratio measures how many ounces of silver it takes to buy a single ounce of gold. For decades, this number has been distorted higher and higher, making silver appear cheap relative to gold. According to Hunt, this distortion was not natural. It was engineered through years of financialization and paper manipulation. But something critical has changed. The ratio recently surged to an extreme high near 126, a level that defies historical logic. Then, without warning, it broke decisively below 65. That break was not random. It triggered a massive macro reversal pattern, a head and shoulders formation. Hunt has monitored this pattern for years. Calmly, he explains that markets tend to revert after extremes, and this one is no exception. Technically, the pattern alone suggests a fall to 32, but Hunt believes that will not be the end. He expects the ratio to eventually collapse into single digits, a scenario most analysts would dismiss outright. The implications of that move are staggering. If gold trades at $3,000 and the ratio falls to 9, silver would exceed $330 per ounce. But Hunt believes markets in late-stage bull cycles never stop at rational targets. They overshoot violently. What begins as a measured advance often ends in a parabolic blow-off. You may aim for $300, he explains, and end up at $500 or $2,000. His voice remains steady, but the warning is unmistakable. Markets overreact in both directions, and when sentiment flips, silver will be treated as real money again. Not cautiously, but emotionally, excessively, and all at once. This perspective is grounded in history. Hunt has studied every major silver bull market, and none ended quietly. They ended in explosive finales that defied logic and rewarded those with the discipline to endure. But this is also where most investors fail. They sell far too early. Hunt introduces what he calls the law of the parabola, a mathematical reality few traders respect. In parabolic markets, the majority of gains occur at the very end. The final 5 to 10% of the move often produces half of the total profit. This is where fortunes are made, and also where fear drives most participants out. Silver investors will watch prices climb to $100, $150, $200, and they will panic. They will lock in profits, believing the move is over, only to watch silver continue without them, accelerating toward levels they never imagined. Hunt is trying to prepare people for a move unlike anything they have experienced. At a certain point, he says quietly, the concept of the dollar itself becomes uncertain. Whether it is a physical dollar, a digital dollar, or something else entirely becomes irrelevant. This is no longer just a metals trade. It is a monetary event. Silver, long ignored and manipulated, is positioning itself to become one of the most sought-after assets on Earth. The breakdown in the gold to silver ratio marks the beginning of what Hunt calls the contagion phase, where momentum compounds, signals align, and prices move faster than consensus believes possible. This pattern has appeared before in the 1,970 seconds and again in 2011. But Hunt believes the current setup could exceed anything seen in recorded history. The break below 65 was the starting signal, and the race is already underway. Most investors are still standing at the line debating whether to participate, while those who understand the setup are already moving ahead. Naturally, the most common question arises immediately. Is it too late to buy? Hunt hears this constantly, and his response reframes the entire issue. If an asset is going to $1,200, he asks, does $82 seem expensive? Suddenly, the math becomes obvious. Investors obsess over entry prices at $80, $90, or $100, convinced they have missed the opportunity. Hunt sees the opposite. He is not focused on today's price, but on tomorrow's reality. In that future, current prices represent hesitation points most people will regret skipping. Fear of pullbacks and doubt about timing prevent participation even as the larger move accelerates. This leads to another challenge that troubles many traders. How do you enter when the long-term charts show no obvious dip? On monthly timeframes, silver appears to be running vertically with no clear support, no clean entry zones. Hunt addresses this directly. Multiple timeframes create opportunity. While the macro trend is powerful, smaller charts still offer pullbacks within the advance. Hunt demonstrates this using live markets, showing silver, gold, and Bitcoin all moving higher, while commentators declared tops. On the daily chart, brief pullbacks provided re-entry points. These were not guesses, but structured trades with defined stop losses and calculated risk. Hunt explains his HVF method, a system designed to exploit volatility within macro bull markets. Stops are placed near relative lows, risk is controlled, and profits are allowed to compound. These positions are not theoretical. They are real trades with real capital already delivering triple-digit percentage gains while the broader trend continues upward. This is not luck. It is process volatility. Hunt emphasizes that volatility is not something to fear. It is what creates opportunity. Small pullbacks during powerful trends are invitations, but most investors miss them because they are fixated on the larger chart and emotionally anchored to past prices. Then, Hunt zooms out further to a quarterly silver chart spanning 75 years, what appears as a compression pattern so extreme it resembles a spring wound tight over decades. He calls it a squeeze within a squeeze. When such structures resolve, they do not drift higher, they detonate. The initial trigger occurred around $25 with a tight stop projecting a target near $333. But even that level, Hunt explains, is not the final destination. It represents a pause, a consolidation before the next leg higher. He is already positioned, planning partial profit taking while leaving the remainder exposed to the full force of the move. This is the dividing line between amateurs and professionals. Amateurs ask if it is too late. Professionals ask where the next entry lies. One group sees a rally and feels excluded. The other sees a rally and identifies multiple ways to participate. Hunt's message is clear. The move has begun, but it is nowhere near finished. And for those willing to understand the structure, the opportunity remains wide open. Then Hunt reveals what he considers the most misunderstood and dangerous element of the entire silver market, a supply crisis so severe that even seasoned analysts have overlooked it. Returning to the gold to silver ratio, he explains that it has remained artificially high for far too long, not because silver is abundant, but because markets became deeply financialized. Historically, the ratio ranged between 8-1 and 15-1. Never before has it remained above 100 for extended periods. The justification was always the same, large above ground inventories. But Hunt dismantles this assumption. If metal is not stored within your country under your control, it effectively does not exist. Much of the supposed inventory is inaccessible, encumbered, or already spoken for. That advantage is disappearing. And once it does, the illusion of abundance collapses. The real shock comes from production. Most silver is not mined intentionally. It is a byproduct of copper, zinc, lead, and gold mining. Only a minority of supply comes from primary silver miners. This means rising silver prices do not automatically increase production. Copper miners do not suddenly expand operations because silver prices rise. Silver is incidental to their business. This creates a structural supply ceiling that price alone cannot fix quickly. Demand, however, is about to explode. Hunt describes a world accelerating toward electrification, digitalization, and energy storage. Electric vehicles, solar infrastructure, smart grids, electronics, surveillance systems, and military technology all require silver. The transition to solid-state batteries represents a turning point. These batteries promise dramatic performance improvements, but require vast amounts of silver. Hunt delivers the critical figure. If just a fraction of these batteries reach mass adoption, they would consume 100% of current silver production. That leaves nothing for solar panels, nothing for electronics, and nothing for industry. At that point, the supply-demand equation is broken beyond repair. Demand could multiply several times over while supply remains fixed. Mines cannot be opened overnight. Decades of underinvestment ensured silver remained too cheap to justify expansion. The correction will not be gradual. Price will be the only mechanism capable of rationing demand. And when that mechanism engages fully, the repricing will be violent. Hunt is not forecasting a typical bull market. He is describing a structural failure where price must rise to levels that feel absurd today, but will feel inevitable in hindsight. Those who understand this are already positioning. Those who do not will be forced to react later at far higher prices if metal is available at all. At this stage, Hunt turns to the most difficult question of all: when to sell. And his answer challenges everything most investors believe. The exit will not be determined by round numbers or emotional milestones. It will be signaled by the gold to silver ratio itself. When that ratio collapses into single digits, the final phase begins. This is where discipline matters more than intelligence. The law of the parabola returns. The last 5% of the move produces half the profit, but it is also where fear is greatest. Media will scream bubble. Friends will urge selling. pullbacks will feel catastrophic. But Hunt warns these are not tops. They are tests. Partial profit taking reduces pressure, but abandoning the move entirely forfeits the real gains. He reiterates that $333 is not the high. It is a resting point. Beyond it lies four-digit silver, priced not in today's terms, but in the context of a monetary system under stress. At that point, even the definition of money becomes uncertain. Whether the unit of account remains the dollar or something else entirely is secondary. In real terms, silver's value will reflect decades of suppression correcting in a compressed time frame. Hunt acknowledges the implications are unsettling. Four-digit silver does not arrive because everything is functioning smoothly. It arrives because systems fail, inventories vanish, and trust erodes. The compression visible on 75 years of charts is resolving now. When squeezes release, prices do not climb politely, they explode. The contagion phase is already underway. His message to silver holders is both reassuring and sobering. The setup is extraordinary, but the temptation to exit too early will be overwhelming. Silver's final stage is never calm. It accelerates, spikes, pulls back sharply, surges again, and then reverses violently when sentiment reaches euphoria. But that moment is not here yet. According to Hunt, this is still the early phase of a multi-year repricing that will permanently reshape the precious metals market. He ends with a philosophy that defines his entire approach. Markets are not enemies. They offer gifts constantly to those who pay attention. Pullbacks, hesitation, and fear are opportunities disguised as discomfort. Bend down, open your eyes, and pick them up. The technical structure, supply, reality, and demand explosion are now aligned. What remains is the personal decision of whether to act, whether to hold, and whether to endure the volatility required to capture the full move. Most will not. They will look back later and say they knew silver was going higher but lacked the conviction to stay in. The train is leaving the station and generational wealth is moving with it. Francis Hunt has laid out the roadmap, and now the outcome depends entirely on what you do next, because silver does not wait. And the distance between hesitation and regret can close faster than anyone expects, especially once the final acceleration begins and the market no longer offers time to think, but only forces decisions in an environment where prices move faster than reason. And the opportunity that once felt obvious suddenly feels unreachable for those who remained on the platform, watching as the metal they dismissed continues higher and higher into a phase where scarcity is no longer theoretical, but painfully real for anyone trying to acquire physical silver at any price. While the world finally realizes that decades of manipulation, financialization, and underinvestment have culminated in a moment where the metal everyone ignored has become the asset everyone desperately needs. And the revaluation is no longer a prediction, but a reality unfolding in real time, with consequences that will extend far beyond charts, portfolios, or profits, and into the very structure of how value itself is measured in a system that is now beginning to show unmistakable signs of strain and transformation. As silver moves from an overlooked industrial input into a cornerstone asset in a world that is rapidly discovering just how fragile its assumptions about abundance, stability, and control truly were when confronted with the hard limits of physical supply and accelerating demand, that no amount of financial engineering can override once the tipping point has been reached and the market no longer responds to narratives, but only to availability and price signals that escalate without mercy until equilibrium is restored at levels few are emotionally prepared to accept. Silver is now on the precipice of a seismic shift. This isn't just a metal trading on market whims. It's becoming a cornerstone asset. This transition is something the global financial system has not fully prepared for. And when it hits, it won't be gradual. The markets will not give anyone the time they hope for. The train is already moving, and there are few stations left. Whether you get on or not depends on how well you understand the forces that are already in motion. Hunt paints a stark picture of the future. As supply becomes constrained and demand explodes across sectors, there will be a massive revaluation of silver. Silver prices, once suppressed and ignored, will surge dramatically. In the coming years, silver will not just be a precious metal, it will be a monetary cornerstone, an asset that holds real value as traditional systems begin to show their cracks. This is a perfect storm of supply, demand, and market manipulation breaking down in the most dramatic way possible. But even with this clear understanding, there's still a question that everyone is asking. When should you sell? The real answer is not about finding the top or timing the market perfectly. It's about understanding the structure of this massive shift, about seeing that silver is no longer just an asset for investment. It's becoming a tool for survival, a hedge against a financial system that is running on borrowed time. When this shift happens, when silver enters its final parabolic phase, there will be no calm, no polite exit. It will accelerate, spike, and then reverse fast, violently and unexpectedly. The key here is discipline. The most critical phase of this move will likely test you more than you expect. The temptation to lock in profits when silver hits $100, $200, or $500 will be enormous. Everyone will feel like they're on top of the world, and the fear of losing profits will drive many to exit too early. But those who understand the bigger picture, the structural change, the shift in value, the systemic risk will hold firm, waiting for the real explosion that will come once the final acceleration begins. Hunt's charting shows us the beginning of this historic shift. The price has already started to move, and though the final stages have yet to fully materialize, they are coming. And when they do, they will reshape the way investors think about silver. The psychology of the market will shift. It won't just be a speculative asset anymore. It will be seen as a store of value in a rapidly changing world. And once that happens, the window for buying silver at reasonable prices will slam shut. As silver moves from an overlooked industrial input into a cornerstone asset, the global financial landscape will never be the same. The demand for silver will rise beyond anything seen before. Industries relying on silver for everything from electric vehicles to solar panels and even military applications will be scrambling for every ounce. This isn't just about scarcity, it's about urgency. The markets have seen flashes of this kind of urgency before, but never to the extent Hunt is predicting. The financialization of silver, which has driven its price down for decades, is now unraveling. With every passing day, the supply of available silver shrinks, and the demand from technology, electrification, and renewable energy grows exponentially. Even the massive reserves previously thought to be abundant will not be enough to satisfy the coming wave of demand. When this reality sets in, there will be no turning back. The transition from a market where silver is undervalued to one where it is seen as a critical asset will happen with such speed that most people will be left scrambling for what's left. As the gold to silver ratio continues to collapse, The price of silver will not just climb steadily, it will accelerate in a way that will feel disorienting to most investors. This is when Hunt's long-term vision becomes clearer. For those who understand the macroeconomic forces at play, silver is no longer just a trade, it's a hedge. It's protection against a monetary system that has been propped up by debt and artificial liquidity. Silver, in this new environment, will be seen as the ultimate store of value. It will be the asset that investors turn to when they realize the fragility of the system they've long trusted. The question of when to sell, as discussed earlier, becomes even more complicated in this context. As silver moves further into uncharted territory, it will trigger the same psychological cycles seen in past major commodity moves. First, disbelief, then skepticism, followed by reluctant acceptance, and finally, panic. Hunt cautions that those who wait until the panic stage to make their decisions will find themselves left behind. The train will have left the station, and those who hesitated will watch from the sidelines as prices soar into uncharted territory. The real opportunity now lies in embracing the volatility and positioning oneself for the long haul. Those who enter the market with the understanding that this move is not just a typical bull market will have a distinct advantage. The key is to stay disciplined and not be swayed by short-term fluctuations. While there will be pullbacks and moments of doubt, these are merely part of the process. The real gains are made by those who can hold their position through the volatility and stick with the long-term trend. Hunt's approach, which emphasizes patience and discipline, will be the differentiating factor between those who make significant profits and those who miss out. By understanding the broader structural shifts taking place, investors can see beyond the immediate price fluctuations and look toward the bigger picture. The current silver market is just the beginning of a multi-year process that will reshape the precious metals landscape for decades to come. However, even for those who have the right mindset, the challenge remains when to sell. The answer is simple. It's not about timing the market perfectly. It's about understanding the structure of the market and being prepared to react when the time is right. Hunt's philosophy revolves around accepting the volatility, understanding that silver will not follow a predictable path, and recognizing that the final stages of the bull market will be marked by extreme price movements. For investors who choose to hold until the final stages of this cycle, there will be opportunities to scale out of positions gradually, managing risk while allowing the market to continue its ascent. Hunt emphasizes that it's important to remember that pulling out too soon can result in leaving significant gains on the table. This is where discipline truly matters. The silver market, as Hunt sees it, is not just a financial opportunity. It is a strategic move in a broader game of monetary policy. As the financial system shows increasing signs of strain, silver's role as a hedge against systemic risk will become more pronounced. Those who have positioned themselves in advance will find themselves in a favorable position when the price of silver explodes. The reality is that silver's move isn't just about making money in the short term. It's about being prepared for a fundamental shift in the global economy that will see silver emerge as one of the most critical assets in the world. As silver advances into higher price territory, narratives will shift rapidly. Media outlets that once ignored the metal will suddenly feature it daily. Analysts who dismissed it will revise forecasts upward. Governments and institutions will begin discussing strategic supply. Each of these developments will feel validating, but they will also increase pressure to act emotionally. Hunt warns that consensus optimism is often most dangerous near inflection points, but in a ratio-driven move, optimism can persist far longer than expected. This is why the exit framework must be grounded in structure, not sentiment. He reiterates that when silver finally reaches four-digit territory in old money terms, it will not be occurring in isolation. Currency stability will already be under question. Trust in financial systems will be strained. The repricing of silver will be a symptom, not the cause of broader systemic stress. This context matters because it reframes silver not merely as an investment, but as a form of monetary insurance. In such environments, selling too early is not just a missed profit opportunity, it is a reduction in protection at precisely the wrong time. Hunt's long-term charts illustrate just how rare the current setup is. 75 years of compression is not something that resolves quietly. Energy built over decades does not dissipate gently. When it releases, it does so with force. The breakout already underway confirms that the market has chosen its direction. From here, the only uncertainty is magnitude, not trajectory. This is why Hunt describes the current phase as the contagion stage. Momentum feeds on itself. Technical signals reinforce narratives. Price validates belief, and belief attracts capital. He cautions that once silver enters the final stages of its advance, opportunities to add positions will diminish rapidly. Pullbacks will become shorter, sharper, and more difficult to execute. Liquidity will thin. Premiums on physical metal will expand. Availability will matter more than quoted prices. Those waiting for ideal conditions may find that the market simply moves on without them. This is not meant to induce fear, but realism. Scarcity changes behavior, and silver is moving toward a scarcity-driven market. Throughout his analysis, Hunt returns to a simple but powerful idea. Markets reward preparation, not reaction. The gifts they offer are rarely comfortable. They appear during moments of doubt, confusion, and volatility. Accepting those gifts requires conviction grounded in understanding, not hope. Those who have taken the time to study the structure, the supply dynamics, and the historical patterns are better equipped to act decisively when emotions run high. As the conversation draws to a close, the message crystallizes. The technical setup is confirmed. The supply constraints are undeniable. The demand drivers are accelerating. The ratio is breaking. This convergence does not happen often, and when it does, it reshapes markets for generations. Silver is no longer a forgotten asset quietly trading in the background. It is moving toward the center of a global revaluation driven by physical reality rather than financial narrative. The question that remains is deeply personal. Will you act on what you now understand, or will you wait for reassurance that only arrives after prices have moved far beyond comfort? Will you trust structure over emotion, or will you let volatility dictate your decisions? History suggests that most will choose the latter, not because they lack intelligence, but because they underestimate the psychological challenge of staying positioned during extreme moves. Francis Hunt has done what few analysts are willing to do. He has connected the technical, the fundamental, and the monetary into a single coherent framework. He has shown not only where silver may go, but why it must go there under current conditions. The roadmap is clear, but it does not guarantee an easy journey. It demands patience, discipline, and the willingness to look wrong before being proven right. As silver continues its ascent, the noise will grow louder. Opinions will multiply. Certainty will feel elusive. But beneath the surface, the structure will remain intact until the ratio signals otherwise. That signal, not headlines or price milestones, will determine when the cycle is truly complete. Until then, the market will continue offering opportunities disguised as discomfort, and the outcome will depend entirely on who recognizes them and who turns away. The train is already moving. Some are on board, some are running alongside, and many are still standing on the platform, debating whether it is worth the effort. History will not pause to accommodate hesitation. When the destination comes into view, the choices made along the way will define who preserved and multiplied their purchasing power and who watched from a distance as the window closed. Silver does not announce its final phase politely. It accelerates its shocks and it leaves little time for reconsideration. The roadmap has been delivered. The warning has been issued. The rest, as always, is up to you.